Imagine a world where crypto trading runs 24/7, while you're at the beach, sleeping, or doing, well, anything but watching the market. Sounds like a dream, right? But here's the twist. This isn't some far-off sci-fi vision. It's happening right now, and it's not done by magic, but by bots. Yes, powerful trading bots that are out there working tirelessly to spot opportunities, detect patterns, and make lightning-fast moves. But here's the real question. How do they do it? What secrets are they following to turn raw data into money-making decisions? Today, we're revealing the tactics behind these bots, strategies that range from recognizing early trends to catching reversals like they're second nature. This isn't just a plug-and-play game. These strategies are carefully crafted to tackle every twist and turn of the market. So if you're ready, let's break down the brains behind the bots and see how they're winning in the world of crypto. To kick things off, we start with a time-tested favorite, the moving average. Picture this as the bot's steady guiding hand, cutting through all that price noise. Bots using the simple moving average, or SMA, track the market's overall direction. They're looking at the price over time, giving them a sense of balance, no matter how wild the market gets. But there's another twist to this story, the exponential moving average, or EMA. Now, this isn't your standard moving average. It's faster, more reactive, tuned into the latest price moves. Bots use the EMA to pick up sudden shifts in real time. Together, these averages let bots adapt instantly, catching uptrends and downtrends with a split-second reaction. Then there's the Relative Strength Index, or RSI. This one's a real game changer. RSI doesn't just track price, it tracks the momentum behind it. Think of it as the bot's way of gauging if the market's too hot or too cold. When prices seem way overbought, bots pick up on that signal and might sell before the drop. But when RSI indicates oversold conditions, that's the bot's green light, signaling a buying opportunity before prices shoot back up. Momentum's important, but bots can go even deeper. Enter the MACD, or Moving Average Convergence Divergence. Now, this might sound complex, but all you need to know is that the MACD tracks two different moving averages against each other. When they intersect in certain ways, it tells bots, hey, a trend change might be coming. And bots? They don't wait around. They're ready to act, aiming to catch trends before they even become trends. And speaking of catching trends, let's talk Bollinger Bands. Imagine these bands as boundaries around the price, expanding when things get wild and tightening when the market chills. When prices start hugging the upper band, bots read it as overbought, and they might sell to lock in profits. But when prices hit the lower band, that's the buy signal, a chance to catch an asset when it's undervalued. Ever wondered if the market has some hidden rules? Fibonacci retracement levels hint that it does. These levels are based on a famous mathematical sequence, helping bots predict where prices might pull back. They use it to set up entry and exit points, giving them an edge when prices hover around these key levels. Let's go deeper. Pivot points. This one's all about spotting shifts in sentiment. Bots using pivot reversals look for these calculated points where prices may change course, and they act accordingly. By analyzing past highs, lows, and closing prices, they gain valuable clues on where the market might turn next, keeping bots a step ahead of the curve. Now, what if a bot could rely on a single, straightforward indicator to guide its moves? That's where Supertrend comes in. This tool tracks prices with a line that flips based on momentum. When the Supertrend line sits below the price, it's a buy. When it flips above, it's a sell. For bots, this simple signal is perfect for high volatility assets, allowing them to adapt without a second thought. And when it comes to following momentum, nothing says go or stop quite like parabolic SAR. These dots act as markers for bots, indicating upward or downward momentum. When the dots appear below the price, bots know it's a green light to buy. When they shift above, it's a signal to lock in profits and prepare for a possible drop. But sometimes, it's not about following trends, it's about finding the average. That's what mean reversion is all about. Bots using this strategy are constantly looking for times when prices move too far from their average, because eventually they tend to come back. By catching these moments, bots can buy low and sell high with strategic precision. And finally, let's talk about the classic strategy: arbitrage. In a market as global and round-the-clock as crypto, prices differ slightly across exchanges. Bots scan multiple platforms to find the best deals, buying low on one and selling high on another. It's all about capturing those tiny, almost invisible price differences that add up to a steady profit stream. So there you have it, the hidden strategies that give trading bots their edge. From tracking trends to catching sudden reversals, each strategy is a key piece in the puzzle. And if you're curious about testing these bots yourself, try a platform like 3 Commas to see how these tactics play out in real time. As always, trade smart, stay informed, and remember, every strategy has its moment in the market.